The stock we're going to be looking at today is Catapult, which actually used to be a SPAC not too long ago, but currently the merger is complete and it trades under the ticker KPLT on the Nasdaq. So in this video, I'm going to be getting into my thoughts on this stock and if I think it's a potential good buy right now. Okay, so first and foremost, Catapult is a United States-based company that was founded in 2012. They are an e-commerce focused fintech company offering a lease purchase solution to customers and enabling essential transactions at the merchant point of sale. So simply put, you can look at Catapult as another checkout option when you're on a website about to buy a product. And they've even partnered with lots of e-commerce businesses already, including Shopify. So here's how it works. Let's say, for example, I go to a website and I find my favorite brand of pickle juice that I want to buy. And after I've added that item to my cart, I can go to the checkout. And once I'm there, I'll usually have the option to pay with either a credit card, PayPal, or sometimes Affirm. And as you might have guessed, you can now start paying through Catapult on some sites. So at this point, you might be wondering how exactly Catapult is distinguishing themselves from those other popular checkout options. And to answer that, I think it's actually probably best to use a different example other than pickle juice, and go with an item that's much more common and practical, like a gold-plated toilet seat. So you've been doing some online shopping and you finally found the perfect one. But now there's a problem. You don't have the money in your bank account to buy one in cash, and you have a credit score of below 600, making getting a loan much more difficult. And this is where Catapult steps in, because what Catapult is doing is giving people the option to buy products they want by giving these people loans of up to $3,500. And what stands out to me as a huge selling point for Catapult is that they have absolutely no late fees, they require no credit, their application only takes about a minute to complete, and they're very flexible with payment plans, meaning there's only a small upfront initial payment, and then you can choose a payment option that works best for you. Okay, so since Catapult charges no late fees, and according to their website, they charge no annual interest on their loans, you might be wondering how exactly they make money. And the simple answer is, they charge a percentage of what you paid for the item. So while technically it's not reoccurring interest, at the end of the day, it's still a fee that you're paying for the privilege of being able to buy an item that you otherwise couldn't have afforded. So to be honest, Catapult was kind of sneaky with their terminology here, but they actually do offer incentives for customers to pay off their purchased items early by charging them less the sooner it's paid off. Moving along though, Catapult also has a ton of partnerships that's helped them with brand exposure and increasing their revenue. Probably Catapult's biggest partnership is with the company Wayfair, which is just an e-commerce platform where you can buy furniture and appliances from. So once you're ready to pay for the item on Wayfair, you'll get the option to pay with Catapult if you choose, where you can pay the initial small amount up front, and then you'll be able to pay off the rest on a month-to-month basis with a reoccurring payment. So moving back to the checkout option Affirm, which rests alongside PayPal and credit cards whenever you go to the checkout. Affirm is pretty popular, and the cool thing here is that both Affirm and Catapult have partnered together. So let's say you're about to pay for an item using Affirm at the checkout. If you get denied by Affirm because your credit score sucks, you'll automatically be redirected through Catapult if you choose, all within the same flow, making Catapult's payment integration seamless and very user-friendly. So basically, anywhere you see Affirm, Catapult is the backup parachute if your first one fails. And this is actually a really good thing because you'll find that a massive amount of traffic can be driven to Catapult via Affirm. So in a way, this is a really cool partnership because it allows Catapult to essentially piggyback off of Affirm, which means that at the end of the day, it just provides a better and more seamless user experience for the shopper. And Catapult has currently partnered with over 100 retailers, including Wayfair, of course, Helix, Lenovo, Purple, and tons of others. And in terms of Catapult's revenue, this company is slowly but surely increasing year over year. Mind you, this slide from their investor presentation is from April 2021. So if we look at 2018, you can see they had a revenue of $43 million, which moved up nicely all the way to $247 million, which adds up to a 139% compound annual growth rate. And look at this, both of their EBITDA, which is just the company's earnings before taxes, as well as their net income, was positive for 2020. And the interesting thing about this investor deck is that you'll notice that Catapult isn't listing their future revenue projections, which, to be honest, I gotta show them some mad respect for doing this, because I can't tell you how many times I've looked through investor presentations and nearly all of them have these crazy future revenue growth projections. It's like, it's definitely good to set goals for your company, but to be perfectly honest, a lot of the growth projection graphs I've seen are so ridiculously high that there's just no way of knowing if they'll ever be able to reach those estimates. And Catapult is staying somewhat grounded here, which is actually really refreshing to see. And for their more recent financials released in June, check it out. Their total revenue for the first quarter was $80.6 million, which was an increase of 88% year over year, driven of course by their continued growth with e-commerce partnerships. And I'm not going to bore you and read the rest, but if you really care, you can pause the video here and read it for yourself. But to sum it up, they're doing really well, and they're continuing to grow. I think those are the main takeaways that you should be getting right now. So overall, I think this is a super cool and under the radar company that's going to continue to grow alongside the trajectory of the e-commerce sector. So the bottom line is, if you're bullish on e-commerce, then I can easily recommend this as a solid pickup. To be honest though, Catapult is a service that I myself would never use because I'm in a position where I wouldn't have to. However, Catapult is still a service that I think is extremely helpful for supporting the business models of any e-commerce platform. And therein lies the beauty of Catapult, I think, because it's lightweight and it's API driven, so it can easily integrate with just about any payment platform. Now, keep in mind, while this is still a speculative stock that has dropped quite a bit lately, it is still in a descending downward pattern right now. And I would wait for a bullish confirmation on this one before buying in heavy, especially if you're looking to get the best deal possible. And yeah, that's the video I've got for you guys today. Thanks as always for listening, and I'll catch you next time.